In 2025, M&A in the MENA region is busier than ever. Deals are bigger, more cross-border investments are happening, and countries like the UAE, Saudi Arabia, and Egypt are leading the growth. But it's not just about the numbers. Regulations and other changes will shape the market in the coming years. In this deep dive, I'll show you the latest data, highlight trends in different sectors, and share insights from two experts who know the market well. Now let's dive in.
According to E&Y, the first half of 2025 saw an increase of about 31% in volume of deals compared to last year. We've seen in the first half about 425 deals for a total of $59 billion. What we see across the region is an increase in cross-border and intra-regional transaction. Q1 of this year saw an increase about over 20%. We have over cross-border transaction represented 52% of all the volume and 82% of the value of transaction. We're seeing also an increase in domestic deals compared to last year, and this is mostly led by the privatization programs that we're seeing in Saudi as well as in Egypt. We're seeing the IPO market, which is still mixed, but this is lower than last year. We're seeing an increase of about 18% compared to last year in the issuance of bonds and sukuk, $87 billion worth of issuances in the first half of this year, up 18%. When you look at the size, we're seeing more and more deals crossing the billion-dollar mark than before. We're seeing a mid-market transactions that are much more common than before. We're seeing smaller IPOs in Saudi and in Egypt. We're seeing debt issuances, as mentioned before, that have increased not only in numbers but also in size, led by government and corporates. And why is that? I'll just simply mention three reasons. The first one is that there's a lot more liquidity in the market. Sovereign wealth funds are a lot more liquid. The government is pushing for more and more reforms, opening sectors to private investments. And the third point is the demand from institutional and international investors is rapidly growing.
According to LSEG data, the value of M&A transactions involving the Middle East or North Africa reached $157.3 billion in the first 9 months of 2025. That's 166% higher than the same period last year. And based on LSEG data, the UAE accounted for roughly $45 billion in target M&A value during the first 9 months of 2025, making it the clear regional leader, far ahead of Saudi Arabia at $5.6 billion and Egypt at around $1.8 billion. Now, which sectors are attracting the most M&A attention and why?
I think the same sectors which are globally in should I say, in fashion these days: fintech, healthcare, infrastructure. We've had a few in the hospitality sector because that's what is keeping this region very busy. There's no specific reason I would attribute to why these sectors. These are sectors which are in like I said, in flavor across the world for investors.
LSEG data shows that materials led M&A activity in 2025 so far with about $32.6 billion worth of deals, mainly driven by major chemicals and industrial transactions. Now let's compare the three markets we're most focused on: the UAE, Saudi Arabia, and Egypt.
If you look at the recent statistics from PwC, including Qatar, 89% of all M&A transactions by numbers in the first half of 25 have been originated by these markets, mostly driven by Saudi and UAE, and to some lesser extent Qatar. In Egypt, while we see a huge increase in number of in activity in terms of M&A and IPOs in Egypt, the transactions still remain very much on the small size. If you mentioned the word competition, with regards to Egypt, there is new competition from the likes of Morocco, Oman, that are taking a little bit, not yet over Egypt, but they're starting to take over some market share from Egypt. But by far, the amount of inbound and outbound activity are led by Saudi and UAE, and to some lesser extent, Qatar.
UAE has lots of transactions where we are seeing a number of families looking to disengage. So the number of deals are a lot more. Whereas in Saudi Arabia, it's large, but focused purely on infra and oil and gas. Egypt at the moment is pure infrastructure. There's very little between fintech and healthcare, but it's coming up. So we will see some activity there over the next 3 to 4 years.
So if you had to summarize, UAE wins on deal count, Saudi wins on deal size, and Egypt is rising but still behind.
Yeah, I wouldn't say any one country is better than the other. Each has a different offering. So UAE is more keen to attract across the sector people who are willing to come and set up a base here, basically catering into Africa and the CIS countries. So the country is offering people easier ways of incorporation, funding for some of those transactions. Saudi is purely looking for, at the moment, in oil and gas. They're very clearly focused on what they want.
Now, it's not all going perfectly. Let's see what could disrupt the progress.
Well, the liquidity is one of the main factors. Another factor that we're seeing is the regulatory environment in international jurisdiction. If you look at why the reason Covestro deal is being postponed is because of the European regulators. One of the reasons why Santos was pulled out, according to the press, was because of the potential regulatory repercussions in Australia. So I think that what has caused the delay in some of the largest M&A is mostly from a regulatory perspective. We are involved on a transaction where we have strong regulatory I won't say pushback, but it's delaying the process. Well, the transaction could have been closed because of the regulatory environment in the Western world. This is causing some delays.
The IMF recently lowered MENA's 2025 growth forecast to 2.6%, citing vulnerability to oil prices, global trade frictions, and external demand weakness.
So, geopolitics would incorporate M&A in any region, and nothing specifically to the Middle East. But as of right now, we haven't seen any slowdown. So whatever is in the pipeline is still going through. Having said that, if this escalates in any fashion and form, there will definitely be a slowdown on the time it would take to get transactions done.
I think that the region has demonstrated to be itself a region of growth, a region of stability. I think that both from investments inbound and outbound, you wouldn't have this inflow of FDI in the region if they didn't feel that it was politically and financially stable. Again, I would mention KKR, I would mention BlackRock, I would mention Blackstone, Brookfields. All of these major sponsors have increased their investment in the region by tenfold, 20-fold over the last couple of years, in spite of all the turmoil that we are experiencing.
In short, the biggest deals now need not just money and vision, but also skill in handling regulations and global challenges. In 2025, MENA's M&A scene isn't just growing, it's changing fast. Big deals, new tech, government investment, and cross-border moves are making headlines. But the real focus is on being flexible, managing regulations well, and staying aligned with long-term national goals. I'm Farah Heiba. Thank you for watching.